The Bay Area housing market is starting to show just some very preliminary signs of a slowdown. Especially here in the South Bay, we are seeing some cities that are experiencing a little bit of a drop in demand or an increase in supply. And that is what is coming up on today's Bay Area Housing Market Minute. For the last 30 days or so, we begin to experience a small, very slight slowdown in pending sales here in parts of the South Bay in Santa Clara County. Today, we're going to be going over Cupertino and why some of the lead measures are kind of off and wonky. It's a lot to take in, and so we're going to go ahead and get into that data. But before we go into the data, if you are a home buyer in today's Bay Area market and you're looking for a comprehensive data set to assist you in your home buying decision making, you can go ahead and text the word data plus the zip code or neighborhood or area that you're looking in, and we will send that data straight to your email inbox. And if you are a home seller in today's marketplace and you're looking for a data set to assist you in your decision making and or pricing your property, you can go ahead and text the word data plus your property address to the number down below, and we will send that straight to your inbox. First things first, let's talk about how ridiculous the closings were in the month of July for Cupertino. We were at 113% sales price to list price ratio. That means that if a home was listed at $1 million, it sold for $1,130,000. That is insane. And we all know that $1 million in Cupertino is, well, you can't buy anything for $1 million. So we're talking $200,000 to $300,000 over list price on average in Cupertino. Now, we are starting though to experience signs of a slowdown. If you see your screen, you'll notice that we have 44 pending sales in the month of July versus 56, a sharp decrease in the number of pending sales. And we are dangerously close to getting right where that inventory level is, right where we are for active listings. Now, pending sales are still superseding inventory levels. And by the way, you don't even need to be near inventory levels in order to have a very white hot market. We are well up and above and beyond what would be considered a seller's market at this point. But this is something to pay attention to because we're starting to see it not just in Cupertino, but in a couple of other cities as well in the South Bay. And so if you look at this data and you're thinking, well, this is signs of a slowdown, it could be. If you watched any of my previous videos, you'll also know that in the summer, typically we do experience a bit of a slowdown in this marketplace. And so it's too early to tell if this is just a summer slump, a summer slowdown. As buyers go into the summer market, they typically start to get tired, buyer fatigue from the spring, they go on vacation with the kids. You name it, there's so many reasons why demand drops in the summer months. And so it's too early to tell, but we definitely want to continue to pay attention to it. I'm fascinated. I'm definitely going to be keeping everyone up to date with how the market is doing, especially here in Cupertino, which is a very healthy city in the South Bay. For anyone that's thinking, oh my gosh, maybe we're in perhaps a bit of a slowdown or we're going to see the market free fall or drop, we're still a far cry away from that. If you notice the inventory levels in the month of July, we were only at 0.8 months of inventory based on closed sales, which means that the inventory would literally need to quadruple in order for us to see even a neutral market, like to reach homeostasis, if you will, in the marketplace. 0.8 would need to jump 4x. So we are still far away from that. Like, to put it in perspective, this last month, we had 41 homes on the market in the month of July. We would need to have 160 plus homes on the marketplace, on the market at one time in order for us to see a neutral market, keeping pending sales the same. Supply demand, right? If supply rises, obviously we're going to see prices start to dip a little bit. But we would literally need to have like 3 to 4x the amount of homes that we have on the market right now in order for that to even start or begin to happen. From a pending sale perspective, we're looking at absorption rate here, which is 126% in the month of July. Now, 126% sounds like maybe not that much, or maybe whatever it is. Absorption rate of over 33% is considered a seller's market. So we are nearly 100% above where we'd need to be in order for us to have a seller's market. And so if we kept inventory levels the same, we would literally need to see, we'd actually need to see pending sales or demand drop by nearly 100%. We're looking at about, 70% in order for us to reach a neutral market. So any way you slice it, for anyone that's thinking, oh my gosh, the market's going to free fall here in Cupertino or other parts of the South Bay, we're still way away from that. But we should pay attention to the leading indicators, because we could start to see the market just soften a little bit, which is great news if you're a home buyer, because obviously the market's been very brutal for all of you for quite some time. And so that's all. We're going to keep you up to date, everyone, on the Bay Area Housing Market Minute. Continue to tune in. This is Danny Gould with the Selling Silicon Valley Group. I will catch all of you in the next video.